Welcome to another live. What we are going to talk about today and now is GameStop and AMC, the two companies all over the place. We're going to talk GameStop. We're going to talk AMC. What can we learn from them? What are they teaching us? What are those two stocks teaching us? And then how and why does this get everybody so emotionally excited? So it teaches us a couple of things. It actually teaches us several things, and we're going to cover what those things are. But we're going to talk about what GameStop and AMC tell us about fundamentals versus quote unquote technicals. I'm going to go ahead and call technicals the story of the market, the story of markets and how they move and how we can read them and how we can know how to react. That's the first thing it teaches us. The second thing it teaches us about is what price does to the average person. It will show you GameStop and AMC are nothing more than extremely exaggerated versions of stocks traded on markets. They are just extremely exaggerated, but they tell the story of every position, whether it's a commodity, whether it's a currency, whether it is crypto, whether it is a stock, whether it is a derivative, an option or a future. What these two companies are showing you is how the market actually works. It's really an amazing thing that not a lot of people are talking about. And then it gives us some insight into what trend following is and how powerful trend following can become. So let's touch base first on the first thing we want to discuss. So fundamentals versus technicals. What trend followers are and how powerful they are, and what these two stocks teach us about our own emotions and our own reactions and what they do to us. And so it's really going to be a great story of the drivers of the markets, the people that get excited about that, what trend following is, and we're going to talk about fundamentals versus technicals because this is a great story of the stock market. So let's start with GameStop and AMC and what they are. These are companies that it's not that they're irrelevant, it's not that they don't exist, but these are not high performing stocks anymore. GameStop sells video games, right? That's what it does. 10 years ago, 15 years ago, GameStop was one of my favorite places on earth because it's where I went to get my video games. Nowadays, you shop for most of your video games online. So it's not that these stocks weren't relevant at one point. These companies weren't relevant at one point, but now probably less so. AMC took an enormous beating during the whole COVID era. Nobody was able to go to the movies. You were literally legally not allowed. So that stock took punishing blows because of that. Now, what do these two companies tell us about the markets in general? Well, let's talk about the fundamental versus the technical analysis. We're using the term technical analysis. All of you that pay attention to me know that's not what I believe it is. I don't think it's technical analysis. I really believe it's just reading the story of the market. But so fundamentally, how are these companies? They're shot. They're done. There's no reason either of these companies are ever going to have a huge comeback again. There's just not. It's not that GameStop won't stay in business. They're probably selling their video games digitally, but that used to be the place to go and the only place to go. You have to realize what GameStop was 15 years ago. There were places that you could buy video games. It's not like you couldn't go to a Target. You couldn't go to a Walmart. You couldn't go to wherever, but GameStop was the spot. So listen to me, you guys, you Gen Zers and millennials. GameStop was the spot. GameStop was your mecca if you were involved in video games. And that's why the stock did so well, because it was trendy. It was a mecca, right? AMC, that's the theater. That's the theater that began the whole, you show up, have a cocktail, have a decent dinner on us, not like old beat chicken nuggets and like nasty nachos, right? Now the soda, the Coke, and the popcorn, that's all theaters. But AMC started this new thing, and everybody believed in it, and it's loved. It was loved back then. It's still loved now. But is there going to be some new revolutionary thing that AMC is going to be able to do? No. No. So what do we know from these companies? Well, you're learning something that I talk about all the time. The real drivers of any market are emotions. Your emotions are manipulated by price. These stocks are hitting these crazy 30% up days, 180% up days, these wild days up, and people get excited and they pile on. And guess what? By the time that those days are happening, and I assure you, I've not even looked at these stocks yet. In fact, we're going to in a minute now that I've just said that. By the time you're aware of what those stocks are doing with these ginormous days, the momentum has already been built. The people that are controlling the volume of these stocks, that are controlling the trading activity of these stocks, that have control of the supply and they're creating false demand, that's what they want you, is excited, okay? So what does this tell you about fundamentals versus technicals? Does it mean that fundamentals don't matter? In this case, yes, they don't matter. None, zero. They matter none at all. In fact, if you were completely honest, it's not that fundamentals don't have a guiding force. They do, right? But what really drives a market is cash flow. We talked yesterday about corporate buybacks, and that's nothing more than a corporation, a publicly traded company buying back its own stock. How that, in effect, pulls the supply down because they're buying back their own stock. So now there's less supply, there's a constant demand, prices rise. So that's cash flow. That's supply and demand and cash flow. What is driving GameStop and AMC right now? Supply and demand and cash flow. Fundamentals play no role. Does anybody even know what the earnings or projected earnings or whatever of these companies is? Does it even matter? Did it matter what Dogecoin, what its fundamentals were? Did it matter what any of those weirdo, meme coins? Did any of that matter? And I'll tell you something, just in case, for those of you that don't know any better, if you're involved in these markets, I had somebody who trades options kind of explain to me, yeah, there is a way that you can identify your risk. Sort of. Yeah, you can identify the risk, but you can be completely wrong, because if the crowd turns, if the herd turns, if the trend turns, if the people in control of the supply dump it onto the market and demand stays constant, I assure you, regardless of what your options are telling you or your futures are telling you, that stock's going to plummet. It's going to sink faster than the Titanic in the Arctic. So cash flow, supply and demand, ultimately you can't fight those things. I don't care how good the company is. I don't care how good its earnings are. I don't care about any of that. If you're in control of the supply and demand and you're in control of that cash flow, you control the price of that position, whether it's a commodity, whether it's a derivative, whether it's a stock, whether it's a currency, it doesn't matter. You're in control. In fact, let's go take a look. Let's read together the story of GameStop. We could do GameStop and AMC, but the stories are going to be really similar right now. So let's go ahead and just read this story. Well, it'll take us 3 minutes, 5 minutes, and then I'm going to end this live. And we're going to talk about why I do what I do and why I offer the VIP mentorship mastery class that I do for 6 weeks, why I have a newsletter that everyone chooses to follow that works with me, why I focus so much on setting up your financial plan. You set up your financial plan. You do 6 weeks of work with me, 2 hours a week. We get together for basically learning 1 hour a week. I record that so that you can receive it whenever you'd like. It usually, I call it 1 hour of Q&A. It tends to turn out to be 2 hours of Q&A. And you know what? I'll be honest. I go as long as people want. If they want 3 hours of Q&A, that's more. I'm happy. The more questions I get, the happier I am. Once you finish that 6 weeks course, let's call that a course, you then simply subscribe to my newsletter where you get updated twice a week on exactly what I see in the market, exactly what I'm doing with my portfolios. It keeps your education going. And by the way, you're getting the view and the vision of somebody who's been doing this for 25 years. So I can identify for you when your emotions are being played with, what's going on, what I see in the market, where there's strength, where there's weakness. Should you be buying? Should you be selling? Should you be holding? So there's my little pitch on what I do. So it's called my company's called Promethean Investing, because I am trying to give you the knowledge. I'm trying to educate you so that you have the ability to go into this thing with such a knowledge base that no one is going to move your emotions enough to have you make a mistake. That's my goal. That's why I'm called Promethean Investing. My name is Derek Miller. You're going to call me Derek, right? That's who I am. That's my company. I call it that because I'm trying to give back, right? This is a system. Set up a financial plan that matters and works. Take a 6-week course. Subscribe to my newsletter. Begin investing like someone who's been doing it for 25 years, 60 hours a week. That is the knowledge you'll be working with as you're building your own knowledge base. And what I want for everybody is at some point to walk away and say, I got this. I know what I'm doing now, and no one is going to mess with my emotions, is going to get me emotionally charged enough to make an investment / financial mistake. Thank you, Derek. I bid you adieu. That's what I want to happen. Now, let's go ahead and let's take a look. We're going to run through GameStop real quickly. As I said, let's read the story of what GameStop is telling us. All right. So as you know, we always start out long. We always go wide, right? We're always looking at big picture. This right here is GameStop going back to 2019. We can make it even, we can stretch it out a little longer. So you folks that don't know can see what I'm talking about. Here you are back in 2015, where it was actually trading as a real stock. It was still valued at $200. Why was it valued at $200? As I told you, this was the Mecca. This is what we all looked for and loved. This was the Mecca. Oh, wait, I'm looking at AMC. Go back. I'm sorry, folks. Ignore me. This is the stuff that happens when you're live. When you are live, you make mistakes, which I just did. So let me make this is GameStop. I apologize. Let's stretch it out further. That's why it was only going back to 2015. It was AMC. So here we are. Let's stretch this out. So here we are back in 2005 up through 2007, where you're trading at $15 a share. Today it's trading at 27. Now, this was legitimate because, as I said excitedly just a minute ago, this was the Mecca. This is what we all looked for. Now, we move forward into 2020 and 2021. As you see, what do you see here? What do we always talk about? What do I always preach in everything that I discuss? I preach trading activity. Why do I preach trading activity, folks? I preach trading activity because ultimately volume / trading activity is what drives prices. Now, the same trading activity that drove prices through the roof will ultimately sink it. Where are we today? We are right here. So how high is trading activity? Well, compared to 2020 and 2021, not that high. Compared to what this company has been doing recently, though, trading activity right now is 100 times what it's been. I mean, this is absolutely absurd. Yeah, maybe more. I mean, maybe more than that. But the bottom line is trading activity is extremely high right now. All of a sudden, we had price move up to a little over $65, back down to $27. So we can see that this is an erratic, manipulated stock. They're controlling the supply. They're creating false demand, obviously. So we zoom into a weekly. What does this chart show you? I mean, in a funny way, it is explaining to you in such an exaggerated way that cash flow and supply and demand drive a market, sentiment, emotions. If there's anything you can learn from this, if there's anything to learn from GameStop and AMC, and trust me when I tell you, stay away from this stuff. What it can teach you is how emotional behavior guides markets, okay? Emotional behavior. Your emotions are the driver for any market, regardless of how small or big you think you are. Your emotions are what guide any market. If there's any proof, GameStop is it. Fundamentally, this company doesn't exist as a real stock, this company doesn't exist. So why are we even talking about it? Because we generated emotion based on price. How do we get price where it was? We collected all of the supply. We now control the supply of this company, and we push it where we want it to. We want prices to rise, we pull supply off the market. When we want prices to fall, we push supply into the market. That will create cash flow movement. It will create cash flow going into the position and out of the position as we see fit. This is completely manipulated, but this is something you can learn from. Now, is there anything we can actually learn from this position when it comes to reading the market? Well, big picture, we've just learned a lot. But what if we zoom in a bit? What if we zoom in and say, can this thing actually teach us anything worth learning? Well, I mean, it just really reiterates everything I tell you on a day-to-day basis. That's the truth. If you look here you are. What's your trading activity like, folks? I mean, this is what I preach all the time, right? Is like what level of trading activity are you dealing with? High levels of trading activity should not be ignored. What level of trading activity did it take to get this stock moving? It didn't take nearly what it's taking right now to sink it. Because once this stock hit the news, everybody started buying it. We're back. And sadly, it's just really less knowledgeable people that understand how and why markets move, stocks, commodities, bonds. They're not touching this stuff. Most of the people losing their money are less knowledgeable, and most of the people making money right now are extremely knowledgeable. So that's what you take from this. I don't want to harp on this too much because the truth is I'm attracting attention to something that otherwise really should be ignored. But I had one more thing that I did want to show you, and here we are now. It's interesting that this showed up. I had a funny feeling we would find this. What do we use to manipulate people, folks? What do we talk about? What do we talk about all the time? We talk about gaps. And why do we gap price, everybody? We gap price because it creates huge price movements from the open to the close, typically. From the close to the open or the open to the... So from the open to the close, that's the way prices should move. However, from when a market closes and it opens at a new higher price, that just generates a lot of excitement. That is exactly what we see here. So what are these two areas? What are they, everybody? Giant gaps. What's interesting about these giant gaps is that one has already filled. Look at price. Look at what price has done. Price has filled the gap. Do I believe price will fill this gap? You know, in companies like this, I'm going to call this a meme stock, and things that act so erratically, typically no. But I'm going to go ahead and think that, yeah, they probably are, because this is the first trip they're taking with this stock. This is the first trip up and the first trip down. They're probably going to want to do this several times, make as much money as they can and get out of the way. Okay, so what have we learned? We have learned that technical analysis, aka the story of the stock market, using supply and demand and cash flow, is the ultimate driver of price, not a company's earnings. We have learned what trend following is. So trend following is nothing more than lots of people piling on to something, typically in an irrational behavior. The prices are going up, so they pile on. That's just following the trend. The third thing we wanted to learn today was how price easily manipulates you. Why would anyone thinking rationally take a stock that was trading at $11 2 weeks ago, pay $60 at the open of the market 2 days ago? Why would they pay 600% premium in 2 weeks for a company that is doing nothing? Irrational behavior based on a price movement because they got excited, because they had FOMO, because they were missing the boat. All right, everybody, that's the live stream for today. I am going to go ahead and stop now. Please, everybody, my system, Promethean Investing, the Promethean process, which is really my process, Derek Miller, Derek's process. You start with a financial plan that helps you to establish goals in a savings plan and an investment plan that is not active. So if you can get to your goals with a non-active investment plan, and then you come on to my mentorship course, which is 6 weeks long, live, right? 1 hour a week, but recorded for you, where I teach you about risk management, cash management, and investment management. We also go through your financial planning and where you're at there. Then we have a live Q&A session each week. That usually goes from 1 to 3 hours, just depends on how many questions I get. You're also part of a community. So we get you into a chat room with other people taking the course and people that have taken the course, where you all get to interact with one another. That starts in a couple of weeks. The QR code is below. Please use it. I'd love to have you. I'm getting it going again here in a couple weeks. So for now, that is 20 minutes of live for today. AMC, GameStop. We went through the story of GameStop. Remember, cash flow and supply and demand are the ultimate movers of price. Price is used to tug at your emotional heartstrings. Trend followers are nothing more than people that see price going in a direction and they're piling on. Trend followers can be very dangerous because usually they're piling on to something just because someone else is. This is not the best investment strategy, and ultimately it will lead you to lose everything you've made and then some. Thanks a lot. Thought of the day, everybody. Take care of that mental health. If you're having a tough day today, I understand. I've been there so many times. I was just there on Monday, 4 days ago. Felt horrible. Feel amazing today, and you will too. Hang in there. Hang tough. Stay positive and do something that makes you happy. Thank you, everybody, and have a great day.